Oh, hey guys, it's Dom. Welcome back to my channel where we all love investing. So, I just finished my research on the new JP Morgan ETF. It is supposed to be the European version of JEPI, the famous income ETF in the US. So, is JEPG any good? Let's find out.
I wanna be a billionaire so fucking bad.
Quick disclaimer, this is not financial advice. The content of this channel is for informational and entertainment purpose only. None of it is financial advice. I'm not a financial advisor. Your invested money is at risk. Don't follow investing decisions you see on the internet. Past performance is not a guarantee of future performance. Always do your own research. So, before we dive into comparing the two JP Morgan funds, let's have a look at what JEPI is about. The JP Morgan Equity Premium Income ETF, short JEPI, is an actively managed fund that generates income by selling options on US large cap stocks. The fund invests in S&P 500 stocks that exhibit low volatility and value characteristics and sells options on those stocks to generate additional income. JEPI was launched in May 2020, so there is limited performance data available. The written call options should provide the fund with additional income, but may mean that JEPI will miss out on the full gains from increases in the underlying portfolio. Okay, so now why has JEPI become so famous? It has amassed over 30 billion in assets under management since its inception in 2020. Investors get a consistent stream of income. JEPI targets a distribution yield of 7 to 9% annually, which gets paid monthly. This makes it an attractive option for investors seeking a monthly income stream. The fund has an actively managed approach, yet is still passive for investors. If someone doesn't have the time, knowledge to sell call options, JEPI offers exactly that, in addition to the dividends paid. Also, the ETF has a relatively low expense ratio for an actively managed fund, sitting at 0.35%. Okay, as you can see, these are some solid reasons for European investors to be jealous, as they are not able to access this popular ETF. But not anymore. The JP Morgan management showed mercy and launched the Global Equity Premium Income UCITS ETF, or JEPG, which is supposed to be a European listed equivalent of the US based JEPI, allowing us Europeans to reap the same benefits. But is it really the same? Let's compare the two. So the inception date for JEPI is May 2020. So exactly 4 years now they've been on the market. With JEPG, they are since November 2023. So this is really a new fund and we have to see how it will evolve. So next we have the fund size. As I already said, JEPI is huge with 33 billion invested and JEPG being this new only 101 million. So yeah, pretty big difference here. The region for JEPI is invested just in US companies, while JEPG is worldwide. Also, the covered calls are from S&P 500 companies in JEPI, and JEPG sells covered calls in the MSCI world. The expenses are the same for both, so 0.35%. And the yield is also the same, about 7 to 8%. It, of course, varies month to month. The number of holdings, there is also a big difference, which surprised me a lot. We have 129 in JEPI and JEPG almost double, so 252 companies. Hey, if you made it this far into the video, you're a legend, thank you. Please consider liking and subscribing as it helps the channel grow. Okay, let's look at the top 10 holdings of this ETF. So the weight of the top 10 are at 13.37%. So that's very low. It's well diversified in my opinion. There are a lot of ETFs where you have the top 10 at 20, 30, 40% weight. So I like to see that. And another surprise is the top spot is a German company with Deutsche Telekom. I think I've never seen an ETF with a German company in the top spot. But then you have popular companies like United Health, Microsoft, Pepsi, AbbVie, Johnson Johnson, and also Japanese like Motorola and Nippon. So yeah, I like the diversification here. As you can see, the top company has just 1.62% weight, so not even 2%. If we look at the countries, United States, of course, almost 60%, but still not too much compared to other ETFs. Japan with 10%, Germany 4, Switzerland 4, and a few smaller ones. And if we look at the sectors, you can see good diversification as well. Technology is the biggest with almost 18%, but healthcare already with 16%, financials 12, consumer staples 11, telecommunication 10%, and then industrials, consumer discretionary, utilities, basic, and other. So yeah, I like the diversification here. What do you think? Alright, last but not least, since this ETF is all about that monthly income, let's take a look at the dividends that got paid so far. So we saw that the ETF exists since November last year, and the first ever dividend got paid in February of 2024, and it was 9 cents per share. Since then it paid out monthly like it's supposed to do, and we see a nice growth as it almost doubled up to June of this year. Of course, this is not a long track record at all, and we will have to see how the dividends evolve in the future. So this all sounds really great, but I want to quickly talk about the risks to consider when investing in JEPI or JEPG. While they offer attractive income, the total return track record is not as strong. As you can see here, JEPI got outperformed by the S&P 500. Secondly, JEPI doesn't perform well regarding capital appreciation because the call writing strategy limits upside potential. So what do you think? Would you consider an investment in JEPG, or is the lack of growth keeping you from it? Let me know down in the comments. I definitely put it on my watch list, and maybe I'm starting a position soon. Thank you very much for watching. I'll see you on the next one. Bye bye.